SK Hynix is a multinational corporation operating in the global semiconductor industry. It specializes in memory products such as DRAM and NAND flash memory. Due to its global operations, the company earns most of its revenue in foreign currencies, particularly US dollar, while many of its operating costs are incurred in Korean won. This currency mismatch exposes the firms to exchange rate risk. Exchange rate risk is important for multinational companies like SK Hynix because fluctuations in currency value directly affect revenue, profitability, and cash flow when foreign earnings are converted into the home currency. Change in USD or Korean won exchange rate also can be influenced pricing decisions and global competitiveness. Therefore, ethical and responsible financial management is essential. These include using realistic exchange rates forecasts, transparent financial reporting, and hedging strategies that are applied to reduce risk rather than to speculate. Ethical practice help protect stakeholders and support long-term business sustainability.
Next, we move to 2.0. Exchange rate forecasting is very important for SK Hynix because most of its revenue is earned in US dollar while its operating costs are mainly in Korean won. This currency mismatch means that any fluctuation in USD Korean won exchange rate can directly affect the company's revenue, profit margins, and shareholder value. An accurate exchange rate forecast help SK Hynix make better strategic and financial decisions, especially in hedging, capital budgeting, and earning planning. Since the semiconductor industry is highly volatile and cyclical, systematic exchange rate forecasting help reduce business risks, stabilize financial performance, and increase investor confidence. Next, for evaluating forecasting techniques, SK Hynix mainly use fundamental and market-based forecasting. Fundamental forecasting focus on macroeconomic factors such as inflation, interest rate, and economic growth, including concepts like purchasing power parity. This method is useful for identifying long-term exchange rate trends, but it is less accurate for short-term movements due to market volatility. Meanwhile, market-based forecasting relies on spot and forward exchange rate and is closely linked to interest rate parity. It is more suitable for short-term operational decision and hedging. However, both methods have limitations and may be biased during periods of uncertainty. Therefore, ethical forecasting is essential. SK Hynix must apply realistic assumptions and show transparency and avoid overly optimistic projections to protect stakeholders and maintain trust.
Next, I will present SK Hynix exposure to exchange rate fluctuations, which explains how currency movements affect the company's financial performance. First is transaction exposure. This occurs when a company conducts transactions in foreign currencies and exchange rates change before payments is settled, leading to gains or losses. For SK Hynix, most products such as drum and HBM are sold globally and invoiced in US dollars, while operating costs are mainly in Korean won. As a result, SK Hynix is a net USD receiver. If the Korean won strengthens against the US dollar, the value of revenue converted into won decreases, reducing the company's profit margin. The second type is economic exposure, also known as operating exposure. It refers to the long-term impact of exchange rate changes on a company's future cash flows and market value. For SK Hynix, this exposure is significant because it competes with global firms like Micron Technology. If the Korean won strengthens, SK Hynix products may become more expensive internationally, reducing competitiveness, lowering sales, and negatively affecting the company's market value. The third type is translation exposure. It occurs when financial statements of foreign subsidiaries are converted into the home currency for reporting. For SK Hynix, operations in China and the United States use Chinese yuan and US dollar, which must be translated into Korean won. Changes in exchange rates do not affect cash flows, but they can impact reported assets, liabilities, and financial ratios, influencing investor perception. Lastly, SK Hynix earns nearly 90% of its revenue from international markets, mainly in US dollars. A 10% change in the USD or KRW exchange rate can affect pre-tax profit by around KRW 500 to 700 billion, showing high sensitivity to exchange rate movements. In conclusion, due to its global operations, SK Hynix faces transaction, economic, and translation exposure. Therefore, effective exchange rate risk management is essential to protect profitability and shareholder value.
For my part, I start with a scenario analysis assuming a 10% depreciation of the Korean won against the US dollar. This scenario is important because SK Hynix export most of its product in USD, especially high-value products such as AI memory and high bandwidth memory. Based on the 2024 revenue of 96.19 trillion Korean won, and assuming that 90% of revenue is export-based, a 10% depreciation would lead to an estimated increase of about 5.96 trillion Korean won in reported revenue. This translation effect helps support strong operating profits and contributes to the company's high operating margins of around 40%. So overall, Korean won depreciation has a positive short-term impact on revenue and profitability. However, when we look beyond short-term effects, the most significant exposure for SK Hynix is economic exposure. This is because exchange rate movements affect the company's long-term competitiveness, especially as SK Hynix competes globally with firms like Micron in the United States. So changes in exchange rates influence pricing, cost competitiveness, and global demand. For example, if the Korean won strengthens in the future, premium products such as HBM3E could become more expensive for international customers. So this would impact future cash flows, market share, and ultimately shareholder value, making economic exposure a strategic and long-term risk. To manage this risk, I recommend two main hedging strategies. First is financial hedging, such as using forward contracts to lock in USD exchange rates and reduce earning volatility. Second is natural hedging, where SK Hynix match USD inflows with USD outflows, for example, by paying USD denominated expenses using USD revenue. From an ethical perspective, hedging should focus on risk reduction rather than speculation. So these strategies help ensure stable cash flows, sustainable profitability, and protection of long-term shareholder value.
In conclusion, SK Hynix is highly exposed to exchange rate risk due to its global export-based operations and strong dependency to the US dollar. Exchange rate movement significantly affect its revenue, profitability, and competitiveness. The company faces translation, and economic exposure, with economic exposure being the most critical as long-term Korean won movement influence future performance. Although Korean won depreciation may increase their report profits, it also raises foreign currency costs. Therefore, SK Hynix should adopt the hybrid forecasting approach, focus on the managing economic exposure through cost efficiency and high value product, and continue prudent hedging and transparent reporting to support long-term competitiveness.